Certified financial planner and co-founder of Flynn Zito Capital Management, Doug Flynn, joins us now this morning. Doug, good morning to you.
Good morning,
Let's just play hypotheticals here. I mean, if Iran pulls the trigger and says, okay, let's go through with the blockade of the Strait of Hormuz, how badly would that hurt the U.S. economy and our wallets?
It would hurt us. The oil has already rode up about $15 a barrel in the past month, and so you could see it go up another $10 to $20 a barrel. And in the equation that you can use just to kind of translate that into what is that going to cost me is pretty much on average for every $10 in the rise in price of oil, it's going to cost about 25 cents more per gallon. So, you're going to get about, 25 cents more soon. You could get another 25 or 50 cents more a gallon if that happens. And now it might not be a very long-term thing if things settle down and the market's not pricing that to happen. But if it does happen, you're going to see that it's going to, put prices on the gas pump, as you see, go up very quickly.
Yeah.
But when things settle down, they take their time coming back down, as we all know.
So, I mean, what's the word for all of us today? There's also even debate over whether Iran can put up a blockade for an extended period of time amidst global pressure. But should we be running out and filling up our tanks like right now, Doug? Or you don't want to cause panic buying and lines at the pump, but
no.
What should we do today?
Yeah, I mean, you could. The funny thing about filling up your tank early is that it doesn't really affect the economy that much because it's just avoiding the delayed purchase later. It's not like you're going to extra fill up. You only need what you need. So you could fill up, maybe save a few pennies, no question. If it comes back up, you're likely going to end up paying more the next time you fill up regardless, but maybe it settles down. Again, right now, the market's not saying, hey, this is going to happen. And if Iran does do something, I mean, they could do something. They could launch stuff from the land. They could throw mines in. It's not a very wide strait. But the U.S. is going to be there, and if they escalate, it's going to cost them. I mean, they run basically their whole economy through this, so I can't see them really doing anything that's really going to cut them off. They're already in a situation. But, when a regime is on its way out, they can and will do anything. So it remains to be seen. But the market's saying right now, hey, this isn't going to happen. But if it does, you'll see that spike.
And not even just Iran, right? But you also think about their allies. I mean, China gets, 50% of its oil and energy, through the Strait as well.
Yes.
So to J.D. Vance's point, Vice President Vance's point, why would they do that? We'll wait and see. Just a couple hours away now from the markets opening for the first time since these weekend strikes. What are you expecting to see, and how should investigators be navigating this uncertainty?
Yeah, it's really interesting. If you look at what we call the futures market, it kind of anticipates what's going to happen at the open, and it really spiked up along with oil prices over the weekend, but it's now settled down. And if you look at the futures market, which is an anticipation of where the market's going to open, it's basically saying this is a non-issue. So the market's completely treating it like it's not going to escalate. And so if it's right, then we're adequately priced. If it's wrong, you're going to see the reaction one way or the other, and likely to the negative if they do close this. You will see a short-term negative reaction. So investing long-term, not to worry. Short-term, you're looking for the opportunities. If there's a drop, you want to take advantage of that.
Copy that. Before I let you go, we've been talking about trade wars, Trump's tariffs for months now. How does what transpired this weekend impact those negotiations with other countries?
Yeah, it's really a problem. He really needs to lock down some of these tariff talks so we can get some certainty. I think that 90-day pause with some of these countries is just kicking the can down the road. We really do need to see something happening. Maybe he has one deal here, really. So the market, again, is anticipating that we are going to get this. And in the long run, things look really good for corporations, but it's really hard for anybody to do anything. So you're going to see inflation tick up a little bit. You're going to see the consumer hold back a little bit in the near term until we get some of that removed. That cloud of uncertainty needs to get removed. And it comes down to these tariff deals. I think a lot of us are sick and tired of talking about tariffs. Just get to it so we can move forward, and hopefully we'll get there soon.
Yeah, we'll be watching and waiting. Doug Flynn, great conversation. Thank you for your time and expertise this morning. Appreciate it.
Thanks.